Okay, for this video I wanted to go over the IRS Form 8911, which is the Alternative Fuel Vehicle Refueling Property Credit. So this tax credit is available in 2021. It actually expires at the end of the year, so 2021 is the last year you're going to be able to claim this unless it's extended again in the future. So I've got the form in front of us. We'll go through this example with a sample 1040. And I've also got one slide here which covers some background information on the form and what type of costs are going to be eligible for this credit. So the 8911 is generally filed in one and two cases. So the first one is you are spending money to install property that's used to store or dispense alternative fuel other than electricity, right, into a fuel tank of a motor vehicle propelled by that alternative fuel. And the costs that are eligible can only be credited if the storage or dispensing is at the point where the fuel is delivered into the tank. Okay. The second one is what we're going to be talking about here is what kind of costs are used to recharge your electric vehicle. Now, just for completeness here, the first point there normally doesn't happen in a personal context. It's more of a business use issue. So alternative fuel is any fuel where at least 85% of the volume consists of something that's other than traditional gasoline, right? So you have ethanol, natural gas, liquefied natural gas, hydrogen. And so most often you see that in a business context where you have a commercial property location, let's say, and you've got vehicles and other type of equipment that need that kind of fuel. Doesn't normally happen in a personal context, so that's why we're focusing on just the second one here, which is the cost to recharge your electric vehicle. Okay, so what kind of expenses generally qualify here? Well, most of the costs used to purchase and install the equipment in your home, so let's say your garage, that's going to be used to charge your qualified plug-in electric vehicle. Now the tax credit for the vehicle itself is separate. So I have a separate video. I'll put a link to that below for the 8936. But if you purchase an EV, a qualified electric vehicle during the year that's a plug-in vehicle, the credit that you get on the purchase of that car is computed separately on 8936. And then the costs that you use to install the charger in your home are used on this form. Okay, so you need two separate forms if you pay to purchase the vehicle and install the charger in the same year. So what costs are eligible here? Well, the cost of the charging equipment itself, obviously. So the home EV charger that you purchase for whatever vehicle it is you got, that's obviously an eligible cost. And then it's all those direct costs attributed to the install. So labor costs to install it. If you need permits, inspection costs. Obviously, this is going to vary state to state and even perhaps on a county or a city basis, what kind of permits or inspections need to be done. But all of those costs that are directly related to the install are eligible costs, okay? Now, the available credit for personal use is capped at, well, it's 30% of the cost to install, capped at $1,000, right? So let's say it costs you $10,000 to install everything. 30% is going to be eligible, so $3,000. But it's going to be capped at $1,000. So $1,000, obviously, it's not a small amount of money. It's definitely a good credit to have, but it is going to be capped at that amount if you go over that amount to pay for the charger, heavily install costs, and everything there. Now, like I said earlier, the credit did expire this year, so if you had these costs incurred in 2021, you can include them with this year's tax return. But going forward, they're not going to be eligible unless, again, it's renewed. If you had these costs incurred in a prior year and the statute of limitations hasn't closed, you can amend a prior year return. So let's say you had this installed in 2020 and you forgot it on your tax return. You can go ahead and amend it. You can amend that 2020 return to include this form and calculate the credit, and then you should get a nice little refund check. Okay, so let's look at the example we've got here. We've got John Doe. He purchases a 2021 BMW 330e, and that qualifies as a plug-in electric vehicle. And so he computes the tax credit on 8936, and he takes that tax credit for the vehicle. And then in the same year, he installs this EV charger in his home. He pays a professional to come do it, and total all-in costs are $2,600. So what we're going to focus here on is the 8911. We're going to ignore the 8936 for the time being because we We just don't need it. Again, it's a separate video. Okay, so let's look at the 8911. So relatively straightforward form. The sections we're going to be working with here are part 1 and 3. So part 1 is the total cost of the property itself. So again, it's your all-in cost. So it's the EV charger itself, all the installation costs, labor costs, etc. Now part 2 is if you are claiming this credit for business or investment use property, right? So again, in this context, it's just a personal use vehicle. We're not filing this with a business return, or it's not being used for business purposes. So we're going to leave part 2 blank. Okay. So part 3 is asking us again the total costs of the total property that was used, or total install cost of the property, right? So $2,600, and then now it's starting to calculate the amount of credit that we're eligible for, right? So the first step is to multiply by 30%. Again, that's where the amount of costs that we're eligible to take a tax credit, and then the maximum personal use is $1,000, right? So again, if this was a $10,000 number, multiply line 10 by 30%, it'd be $3,000. But again, this would be limited to line 12, right? So you can't have more than $1,000. In our case, we're going to take 30% of $2,600, so our eligible credit is going to be the smaller amount, the $780. Now, what it's also doing down here is it's trying to calculate how much of the tax credit we can actually use, because again, this is a non-refundable credit, right? So in other words, we are not going to be able to take this tax credit if we don't have enough of a tax liability, right? Refundable credits, you can get a tax credit even if your taxes are zero, but with non-refundable credits, you cannot get a tax credit unless you have some tax for that year. So all things said and done, we have $780 of available credit to use, and so that's the amount of credit that we're going to be able to take on our tax return. So once this form is completed and we get to the 780, that number is going to be reported on Schedule 3, right? So Schedule 3, additional payments and credits, broken into 2 parts. We have Part 1, non-refundable credits, and then Part 2 are the other payments and refundable tax credits. So in our case, we've got a non-refundable credit, and that's reported down here on line 6J, right? So we have alternative fuel vehicle refueling credit, attached Form 8911. There's our $780. And then so ultimately this number is going to pass up to page 2 of the Form 1040 on line 20, right? So line 20, it's asking us, pull the amount from Schedule 3, line 8. And the only credit we have for this example is the $780. So John's total tax for the year is $14,000. He gets to take a credit of $780. And so now his total tax is reduced to $13,234. Okay, so that covers it for this example. I hope that was helpful. If you have any questions, feel free to leave me a comment below. Happy to answer any I can. And I look forward to seeing you again on the next video. Thank you.